Friday, August 3rd, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about an article I've just seen on Silver Doctors, and it explains in words and in data what I've been telling people about what central bankers and the system, the fiat money system, is doing right now to the general public. And it's called 21st Century Misery Index, Labor's Share of the Economy and Real World Inflation. It's by Charles Hugh Smith of Two Minds. And this is for US, of course, but it applies to all the other countries in the Western world. And I'll go through that a little later on before I look at the markets. It's 7:45 a.m. London. Gold and silver, of course, have been continuing to be hit hard. A lot of people are saying the Chinese now are manipulating the gold price. Maybe, but it's not only the Chinese, it's also the British. As the pound drops as well, you can bet that the Bank of England's in there trying to get gold lower in dollars in order to keep the British pound from collapsing even further. It's collapsing against fiat paper dollar, but they don't want the public to see it collapsing against this, which is real money, of course. Yesterday, for example, the pound dropped about 0.8%, and gold in dollars dropped about 0.6%. So actually gold went up in terms of pounds. It would have gone up even more, excuse me, if the gold price hadn't been manipulated. If gold had remained unchanged yesterday, which wasn't asking much really, gold would have gone up 0.8% in pounds. So yeah, there are people saying that the Bank of China is pegging gold to the yuan. As the yuan goes down, gold goes down. But I would say it's not just the Chinese, it's the British, the ECB as well. People need to understand that a rising price of gold in whatever currency is not a good signal. So that's what they need. That's what they do. So I dare you guys also to look at the chart of gold in sterling versus the price of gold in dollars, and you can see that they're pegging. The British are pegging the price of gold. And sterling as well. So if GATA is going to complain about the PBOC, they should complain as well about the Bank of England or the ECB. So yeah, for me here in the UK, yesterday gold protected me. I know it's very frustrating for Americans to see the price of gold where it is right now, 12.06, down another $1.70 overnight. The range has been 12.54 to 12.05. So that's where we are. Silver 15.27 to 15.35. The range has been 15.25 to 15.35 has been the high. Sorry about that. It's down 3 cents right now. The Dow is virtually unchanged, 25,323. Stock market again yesterday wasn't doing well before the market opened, and I saw a chart of the Nasdaq when it opened. It was a joke. The Nasdaq was down on prior to the open in the futures, and you look at the chart and the Nasdaq just like bounced straight up right at 9:30 a.m. New York. Amazing how that happens. Of course, gold went down. I remember years ago when I was working in the futures market as a broker, and I forget the year, it's been a while, but I remember there was a crisis in Pakistan, and even Karachi has a futures exchange. And there's an article on Bloomberg or something talking about how the Karachi index hadn't budged. So there's a crisis. So what they decided to do is just to say, well, this is where the index is. So it's like a straight line. I guess the Pakistanis have not been taught as well by the market manipulators from the West I guess the working group on financial markets would have told Pakistanis, you need to keep things open, you need to change the perception, you need to manipulate the price. But I think maybe the public in that country is not as brainwashed to believe in those things. That's why they couldn't do it. But in the US, in the UK, in Europe, people are brainwashed into thinking that interest rates below 1% are a normal thing. The stock market is virtually unchanged this morning. I won't go over much of it at the moment. Currencies, the pound is at 130.12, so it's stabilized a little bit. It's down only 5 pips this morning. I think it will break 130 very soon. Yesterday, the Bank of England voted 9-0 to raise interest rates. Market was expecting 8-1 or 7-2. So that was taken as hawkish, right? And pound was at 130.70 before the announcement, bounced to 130, and then just dumped. And that's where we are right now. The euro continues to weaken here a little bit. We were above 117 a few days ago or a week ago. We're now 115.80. And the dollar yen, fairly stable, 111.70. And yes, the dollars continue to go up against the yuan. We're now at almost 690. The high's been 689.99. So up another 0.25%. So yeah, I guess the Chinese officials don't want the public to also see their currency going down quickly against gold. So you've got the Chinese, you've got the guys at Threadneedle Street or Bank of England. You got the guys in Frankfurt, the ECB. They're all conspiring to keep their currencies from dropping against real money. And that's why this here, by the way, it's a gold sovereign. And that's why these central banks still keep thousands of tons of the stuff. People have to wake up to that reality. What else? Well, crude is back up above 68. So I didn't really look at it yesterday too much. It was up yesterday, but it's right now 68.25. Yeah, the 10-year yield is still hovering around that 3% level. Right now it's 298. Overnight range has been 298 to 3%. Cryptocurrencies are still on Bitcoin. Had a good rally about 10 days ago or so. Went up to above, I think we got above 8,000, yeah, and now it's coming back down at 7,300. So now to this article by Charles Hugh Smith, 21st Century Misery Index. And I'll read a little bit from the article. And he talks about the misery index signals things have never been better, but that's because the data isn't accurate. It's time for a new index like the one proposed here. So I won't go too much. I'll put a link to the article so you can read it. But I wanted to show you a few charts to show you why the public is feeling, the general public, and not only in the US, but in the UK, why there is so much wealth inequality. And by the way, I'm not a socialist. I'm a free market rule of law guy. I think, yeah, and so here it is. The price changes. Selected consumer goods and services for the last, well, from 1996 to 2016, a 20-year period. And you look at the things that have gone up. Textbooks, college tuition, up over 200%. Childcare, over 100%. Healthcare, over 100%. In the UK, we supposedly have free healthcare, or the NHS, that great socialist or communist institution. Yeah, people say, oh, it's free. Yeah, the thing is, you see the cost of healthcare has gone up over 100%. That's why there are shortages in the NHS. That's why the service isn't as good. That's how it's reflected in the system that is centrally run without price mechanism. Food and beverage, over 50%. And I would argue that that's probably a lot higher now. It's been 2 years since this was put together, this data. So yeah, labor intensive, largely non-tradable goods, things that you need to survive on to raise a family, right? And then you get, and I would actually add housing to that. You know, people need to rent or buy a house to live in, and that's not there either. But that's gone up too, quite a bit in the last few years. I know it corrected in '08. And then you look at the things that haven't gone up that much: capital intensive, exposed to global competition, largely tradable, new cars, household furnishings, clothing, cell phone, software, toys, TVs. And I think that's probably why people still think, still not angry about things, because some of these things are still affordable, but they're not things that you need every day. The other thing I wanted to show you is this here from the Federal Reserve Bank of St. Louis, or FRED. And it says official inflation of consumer prices is as low as the early 1960s. Too bad it doesn't reflect real world inflation. So you can see, do you really believe that we are at levels? I would say inflation is more like in the 70s and early 80s. And the other one that's really interesting is labor compensation's share of GDP. So that's how much people, in general, the working population is getting paid as a percentage of the economy. And you can see that it was quite good in the 90s. It rose, and then you had the dot-com bubble, and it dropped sharply, rebounded a little bit before the '08 crisis. And we are at levels never seen before, well, at least not on that chart. So, and the other interesting one, the ever-widening wage gap. The chart below shows the growing change since 1973 to wages among men at the top and middle of the earnings distribution. So the green line is the 95th percentile, upper caste of technocrats, professionals, and state nomenclatura. So that's the politicians, the bankers, the accountants. How can I say? Their wages have kept up, kind of. They've gone up 51% since 1973, while the 50th percentile, which is everyone else, they've gone down 4.6%. That was until 2015. And I would argue, if you count for real inflation, that's gone down even more. And that date again, 1971, 1973. 1971, of course, President Nixon closed the gold window temporarily. 1973, the world went off the fixed exchange rate system of Bretton Woods, and countries started printing money out of thin air. The dollar got connected to the petro dollar, and it's no surprise that inequality has gone up. And one of my viewers made a comment about trade unions, and I said that trade unions in the 1800s were proponents of sound money because they wanted their members to earn in the best currency possible. So wake up, trade unions, if you're still out there. And he goes on to say, Charles Hugh Smith, so wages have risen $300 a year, while real world costs have risen $3,000. This is why people don't feel more prosperity in their paychecks. They have been losing ground for a decade or even longer. That's what the central banks are doing. They're like pillaging the public to keep a few thousand people in a system that benefits very few going. Money, sound money, is supposed to be a utility for the general public. I'm not saying there's never going to be poor or rich people, But the present system right now, you've got very few people owning everything and a lot of people owning nothing. And that's what the fiat money system does. The other thing I wanted to show you is that I must be doing something right. I'm on LinkedIn, and who's been searching me? So I must be doing something right. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. And if you'd like to donate to the channel, there's some links below in the description. Thanks for watching. Take care. Bye.